Good morning. This is Tom Alexander. It is Sunday, December 15th. It is about 9:30 a.m. Eastern Time in beautiful Charleston, South Carolina. We are coming into the end of the year. We're in a holiday period that is typically seasonally positive. We're having a pretty historic up year in the SPX. We've had a pretty historic rally since the end of November. Uh, we do have some divergences that I'm going to discuss, but in general, now the big caveat here is that the next big exogenous, and I think the last exogenous event, at least known for this year, occurs midweek with the Fed meeting, where the Fed will cut rates presumably, and then outline their policy going forward. So that could certainly roil the markets one way or the other. But the markets at the moment are positive. But again, there are some divergences. So let's take a look. By the way, if you are finding me for the first time, you can find other material, including this report. It's free. Go to alexandertrading.com, click on weekly update. You can get the report for this weekend. You can get reports from other weeks going back several years, and you can judge for yourself how objective, accurate, and consistent I am. I do try to be objective and consistent, and certainly I try to be accurate. You can judge that for yourself if you go back and review these reports. These reports include a PDF you can download that include all the charts that you're going to see, and maybe even more are included in the weekend updates that you see here. So also, by the way, I would very much appreciate it if you would like and subscribe to the channel. It helps with the algorithm as I try to grow the channel. Okay, we're going to start with the weekly view of the four primary U.S. indices, the SPX, the NDX, the Russell, and the Dow. And as you can see, we have the NDX closing at a new all-time high, up for the week. And then you have the Dow and the Russell on their lows for the week and below previous week's lows. And you have the same view for the New York Composite. I'll get into the New York Composite in just a minute. But so we have this huge disparity among the indices. Now, this could typically be considered bearish, and we'll go on the bearish side of the ledger. I'm going to show you something in just a minute, though, that counteracts it and could go on the bullish side of the ledger. But let's just look at the levels. So these are the weekly charts, and again, these are posted on the website if you want to study them closer. Here are the individual indices. Now we're going to look at them one by one. And this is a chart that I posted last week showing the current rally, and that it was about 4.23%, and that was not extreme compared to other rallies in 2024. For 2024, we're up 27+% from the end of 2023 into this high so far. So the rally that may have just ended or may be pausing is only up 4.23% from this November low. Now, this mid-November low is the latest and greatest important pivot. You can see we've been making a series of higher highs and higher lows all year, interrupted briefly by this decline into the summer low in August. But since August, the August low, we've pretty much been straight up, higher highs and higher lows very cleanly. Now, if we turn around and look at the Dow has been down now like 7 consecutive days. 1, 2, 3, 4, 5, 6, 7. I've gone back and looked, and a couple of years, and I can't find another time when we've closed down 7 consecutive days in the Dow. Even in a bear market, this is getting extreme. Now, a lot of this has to do, I think, with end of the year machinations among the institutions repositioning because of the election and what they perceive as headwinds for certain sectors or certain companies based on policy that may or may not change. Okay. And then let's see, the NDX, of course, is just straight up. Uh, its rally is continuing now. The current rally is about not quite 8% off this mid-November low, but the NDX tends to be extreme up and extreme down. And then we go over to the Russell, and this is a weekly chart of the Russell. We double topped against the all-time high and have basically been straight down for the past couple of weeks. This is a weekly chart of the Russell. And then if we look at the New York Composite, which is the broadest of the high cap indices, these are all the stocks in the NYSE. We're down about 3%, and this has been straight down. And this is a daily chart. Now, this is where, to me, it gets really interesting, and I can make a bullish case. There are two things here. VIX is a little bit elevated here recently, but not that much, and it's way off its summer lows, and it's continued to make peaks lower and lower and lower. This is potentially very bullish. Now, this is sort of a head scratcher. This is what gives me a little bit of pause about being overly bearish because of these divergences at the moment. First of all, you have the Dow that's down 7 days in a row, so you're due for a bounce there. You're also due for a bounce in the New York Composite, and I covered the New York Composite on the website and in the charts and the PDF that you can download. So I'll let you do that, but. You can see breadth here. The 10-day moving average of NYSE advancing issues, which is this red line here, is reaching a downside extreme from where you typically get strong rallies, especially in bull trends. Now, if we were to get some sort of a flush to the downside in breadth, and you can see how far above we are this pivot, this is the latest and greatest intermediate term pivot. Now, you do have a little bit of a ledge here from last week's lows. I consider this sort of a minor pivot. I would have a hard time believing that we're going to trade from here and take out this low before the end of the year. I just don't see it. I think it is more likely that we're looking and probing for some sort of a low between where we are now. It's not, you can see where we closed on Friday and saying here. Now, I realize this is a big area, but that's just the way it is. So if we were to spike down in here, it would, to me, I think it would be an interesting setup for potential long trade into the end of the year. We shall see. Okay, guys. Again, reminder: the midweek Fed meeting is going to have a tremendous impact on what happens going forward into the beginning of the year. I'll certainly be updating along the way. I hope you found value in this. And again, if you did, please like and subscribe. You guys have a wonderful week. I'll talk with you again soon.